Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 5th of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, if you read my post earlier today on the main Substack, I was talking about the possible bear flag that might be forming here on equities, and you can see there's a possible triangle or flag. Flag would require a little higher, really, but could be either. But I'm expecting to see a return to this low, and then very possibly lower. Although we do have some positive divergence here. What we don't have is good news. I was saying that there was a possibility being raised by Howard Lutnick that we might see some major modification to the Canada tariffs today, and we saw a little bit, i.e. the US car manufacturers got an exemption for a month. It's not a great big change, and realistically, I'm not entirely sure where we are in terms of tariffs, but Trump did say that in the event that Canada responded to the tariffs, which is a little silly because obviously they were going to respond to the tariffs, but I think he was genuinely thinking they might not. But obviously they have, and he said that he was going to slam on retaliatory tariffs to their retaliatory tariffs, and then they will ramp it up again, and well, that's how a trade battle turns into a trade war. So this, looking at the speech yesterday, we've also got a pretty good indication that that we're going to be seeing major tariffs going in against the European Union, India, and well, as far as I know, everybody else. So we are in an interesting environment. Generally speaking, what happens in the trade wars is everyone gets poorer. Growth slows, inflation goes up, everyone gets poorer. It's not really a win situation for anyone. Is this game likely to herald in a golden age for America's economy? Well, I suspect not, but you never know. We've had plenty of there have been plenty of trade wars before, but there hasn't been one before this year. Maybe it's all going to be different now. We shall see. In the meantime, this is a challenging environment, and I'm expecting this to be challenging for the next few months. Now, I was talking about how I was seeing this year going. Now, I think that when we see inflation going up, growth slowing, interest rates going up while growth is slowing because inflation has been going up, I think then it will become obvious that this trade war was a bad idea, which, to be honest, I think was obvious to start off with, but sometimes you just got to go through it. And so this is an experiment. Trump thinks it might work out very well. I don't. So I think we're in for a rough few months, and I think we could see a rally here, and I am watching out for that, and I'll show you the setup for that in terms of the divergence. But I have to say, the news at the moment is all bad. Now, we've seen a lot of news bombs, and maybe we'll have a good news bomb tomorrow. But in the absence of that, it's very hard to be optimistic about short-term direction. And obviously, we've got a whole load of topping patterns. I posted these weeks ago and said these, I said on Twitter, I think that, these were some of the nicest. No, I think I said it in my following post. These are really some of the nicest set of topping patterns on the US indices that maybe I'd ever seen, actually, or at least certainly in the last 20 years. And they're really, really nice. And they're now starting to play out. And I think at the moment, looking at the environment, I'm thinking they may well play out entirely. And then it's possible, of course, we'll go lower. We will see how it goes. But at the moment, I am thinking that this is going to last a period of 3 or 4 months, and then it will be given up as a bad job because obviously it's failed. I think a lot of people that will be causing a lot of pain. A lot of MAGA voters will be suffering along with everybody else. And I think Trump, who is very concerned about his economic legacy, will pull back rather than be shot out of the cannon, as he suggested back in 2012 for anyone who let the Dow fall 1,000 points in a day. We shall see. 2 days it was. All right, so ES, I think this is probably a bear flag forming. NQ, this kind of looks like a bear flag too. RTY is looking like a bear flag forming. These might be bear flag triangles, but I'm thinking we might see a bit higher tomorrow, and then make them proper bear flags with, A, B, C. On YM, We're already getting a slightly higher last wave here. I'm thinking all of these might go up a little tomorrow. They could go up a lot, but I think when the news is bad and the divergence is good, well, generally speaking, the news is going to win, but it might not be the case this time. DAX, decent looking double top, not ideal. Really, I'm amazed how much DAX has gone up this year. I have mentioned, I think in the pre-market post this morning that actually DAX, the German economy has been in recession for 2 years. How on earth has DAX been doing this well? Amazing. But goes to show. That's so ESTX. We've got a double top here. It's broken down. It's largely rejected back up to the high. I'm thinking it might get back up to the high and set up a slightly larger double top, but I'm wondering if we might see the same on DAX. But as I said, if it does do that, it's not really going to be on good news. Let's have a look at the bigger picture charts. Okay, looking at ES, we've got a possible RSI 5 buy signal brewing, and we've got a double top which is breaking down with a target on SPX, which is in the 53.60 to 54.40 area. At the moment, I'm not seeing much reason to think that isn't going to make target, but we do have a possible RSI 5 buy signal brewing on SPX and ES, and we had one brewing on the Qs, but that's now fixed. So we've now got an RSI 5 buy signal fixed on the Qs, we've got an RSI 5 buy signal fixed on Dia, and on IWM we have another one brewing. Altogether, this is some nice looking action actually. Yeah, we've got a possible RSI 5 buy signal brewing here on IWM. So we've got a lot of positive divergence here, and maybe that'll deliver if we do get some good news, but at the moment I'm struggling to see what I'm seeing as good news. We will see how that goes. All right, I was talking about the, have a look at my post earlier today. I won't talk about it tonight, but I was talking about the weekly pivots. The weekly middle bands and where we were in terms of those. Well, I'll talk briefly about them. SPX and Dow have broken below them this week. NDX broke below it last week, and IWM broke below weeks ago. It's clearly already been in a downtrend. I'm going to be watching to see if NDX confirms the close below this week, and obviously whether SPX and Dow do that next week. And I was thinking we might see a strong rally if the tariffs were dropped or delayed another month or whatever, but at the moment there's no sign of that happening, so we shall see. All right, so that's where we are. Short term, we're seeing what I'm leaning towards being the distinctive slightly higher low. This looks like a bear flag for me, and pretty much that's across the board. All right, let's have a look at DX. Now DX, we had a potential for a double bottom here, and it went straight through. And actually, this was odd and surprised everyone, because everyone was thinking that tariffs would probably be bullish for the dollar, but it appears that that's not obviously the case. We shall see how that goes, but we've had plenty of opportunities to set up some positive divergence here, and we haven't. Or at least we set a bit up here, and then we lost that divergence. So at the moment, this is heading straight down. Looking at EURUSD, broken way up. Again, we had a nice double top here. It broke down and then just failed hard. This is a strong move. Looks like an impulse move. I've actually got a possible 60-minute sell signal brewing here, which is worth noting. GBP USD, we've got a 60-minute sell signal fixed, but it's almost miraculous that it hasn't managed to fail yet. But we've been seeing some serious spikes up on USD. JPY, this hasn't actually really done a great deal, which is odd because it's 77% of the index. I was talking on the pre-market webinar today about the possible head and shoulders that's forming on CAD, and that has now broken down. Hang on, I'll just give you the target on that. This is more what I would expect to see while the dollar was breaking down, but we've got a target here, and that is, bear with me. All right, that is in the 1.42 area, and at the moment, can't see any particular reason to think that's not going to make target. USD, Australian dollar, I was saying I was expecting this to make target this morning, and wow, it did. We've got a little bit of negative divergence here. On NZ, again, these have been powering up. I've again got a possible 60-minute sell signal brewing here, and I am wondering if that might deliver. But at the moment, I don't know, it's been spiking. It's unlikely to go in a straight line. Maybe we will see some retracement. All right, ZB. Well, ZB, let's have a look. We've been coming off, we went through my trend line here, we respected it, we went through it. This looks an awful lot like a megaphone, which is has overthrown bullishly and broken down. Now, this is actually something important. One thing I've been reading is that the administration's been very encouraged by the fact that interest rates have been going down, and obviously everyone's been patting themselves and congratulating themselves on that. But the fact is, I've been saying for months that we have unresolved business above on TNX, and I expect it to go higher. And I've been suggesting that what we've been seeing here is a bear flag, and I think it is a bear flag. And we saw a big move down. This is a proportionate bear flag. You'll see when I come to the TNX chart. I think this may just break down, take us all the way back here, down here into the 110 and change area, and then head down into the 104 to 106 area provisionally, although the target I'm looking at is really a TNX target. Let's have a look at that. All right, on DX, we had an RSI 14 sell signal that was hanging around for ages and has now made target. We had a nice looking bull flag forming, and we've gone straight through it. We are at the moment more than halfway back to the rally start of in the late September in 99.66. This is looking pretty good to the downside. In terms of the pattern here, what I was projecting when we initially, I was talking about the very nice resistance trend line here, and I was suggesting that we might reach it. And we did reach it, and we went slightly over it, and that looks like a bearish overthrow. Now, what are we looking at in terms of a pattern here? Well, actually, I've got one. I'm going to draw it in for you. I think it's useful if I draw things for you in front of you every so often, because it gives you more insight into what I'm doing. Now, here, we've got a pretty nice looking head and shoulders. Why is it nice? Well, it's got an upsloping neckline, but notice that the left shoulder and the right shoulder are fairly even. They are balanced, and that actually makes it a pretty good pattern. What does that mean? Well, it's so easy to do this. You can very, very easily do this yourself. This is how you work out the target on a head and shoulder pattern. All you do is you take an arrow from the high, you move it down to the neckline, as close to the top as possible, and close to the point where you have the top, and then you draw a line of equal length downwards, and then you put it at the break, and that is the target. So we've got a target down in the 102 area, and really we're looking at a full rejection here towards a target in the 100 area. This is a big move and a sizable reversal. And the other reversal we've got potentially here is on TNX. TNX, we actually had, hang on one second, we actually had a move down here. I was watching, we've got a bull flag that's broken up here. I haven't drawn in the full flag here. You can see that on the daily chart. But this was the flag, it's broken up, and that broke up with a very clear target at 49.97. We got up to 48.09. We have come down, and I think what we did was we formed a bull flag. And you see that is the mirror image, in effect, distorted, but nonetheless, of the bear flag that we're seeing on ZB. What happens after that flag? Well, you tend to break up. We came down here, we tested the 200 DMA, broke it a little, and we are finding support. We've not broken rising support, and I'm thinking we're heading back up into first for a retest of 48.09 and then 49.97. And when we arrive there, we should be seeing the first green shoots of renewed inflation. On the daily chart, we've got a weak RSI 5 buy signal that's fixed, and these have a pretty good track record. It's not perfect, but it's pretty good. I've got every expectation it's going to reach the 70 area, and that we will see a full reversal back up, at which stage obviously the administration is going to be starting to get a bit concerned about inflation, because we come to the big inflection point I've been talking about for months. Oh, by the way, we've still got an RSI 14 buy signal fixed on the hourly chart as well, but we've got a nice reversal. Was it a nice flag? Okay, no better than okay. But it was okay. It's bullish underthrow there. A long way to go here, but I think it's got a pretty good chance of making it. What does it mean when we do make it? Okay, we've got a potential inverted head and shoulders. We've got one here that's already broken up, or we could see an alternate here that is forming, but basically one way or another, we've got a decent looking inverted head and shoulders. Well, okay looking. invest head and shoulders, and we've got ourselves an inflection point. When we get back to 49.97, that could be the second high of a little double top here. Or in the event, let's say, that inflation was going up, and I've been thinking about this for a while. And actually, when I'm going to be doing a post on bonds soon, and I'll reference the last one I did in quarter four last year. And really, I was thinking about this kind of situation, and we're coming up to the stage where it's going to happen. What that situation is that we've got an inflection point here. This could be a double top. We could see a breakdown from there, but I'm not seeing any obvious reason why it would do that. The other thing we could do is this IHS could break up and take us up into a target, ideally near the 50% retracement in the 8.119 area. Now that would mean that 10-year yields were at 8%. Now I know that seems pretty high, but if we see inflation going up significantly, then actually it's not that high. Also, the other thing is, and this is something I mentioned as well, and it's worth mentioning again. Trump was talking about eliminating the deficit. There's no realistic prospect of doing that, and if he's thinking he's going to do that from tariffs, there's no way. And I think the deficits on the annual deficit is on course to be in the 2 trillion area this year. The maximum he could possibly raise really out of tariffs, if he went on with everyone and it didn't actually affect current levels, would maybe be 700 billion, 600 billion, but in practical terms, that's not going to happen. Retaliatory tariffs will be paid on equally. I mean, as we're seeing in Canada at the moment, long-term allies, where you go into a trade war with them, feel rather betrayed. Their citizens stop buying your products and they say, damn it, I'm not buying anything from America. And we are seeing that in Canada. The same will happen in Europe. In fact, the same will happen pretty much everywhere. And there will be retaliatory tariffs from everyone, and this is why trade wars aren't a usual tool of government. If no one uses it, it's generally because it doesn't work, and it's not likely to work this time. But what it could do is it could get, and this would be a really obvious, lovely technical target. We had basically, we had a 38-year bull market in bonds. Wow. These things do tend to take decades. But when we reach this low here, what I was saying was that we were probably looking at a bear market in bonds that would last 10 to 20 years. And we are 5 years into that. This level here would be a 50% retracement of what was a bear market in bond yields, because it was a bull market in bonds, inverse view. So actually, this is a really nice technical target, and I think with what looks like an all-out trade war on multiple fronts fairly soon, then I think we could reach 8% this year. And the other thing is, in terms of the budget, there's no real plan for. I mean, admittedly, they're cutting expenses, and that's not a bad thing necessarily. I think Trump's administration's causing an awful lot of disruption. I don't think that's inherently a bad thing either. And the whole Western world has got into a rut of higher and higher debt, and it needs to snap out of it. I don't think giving lots of tax cuts to billionaires is necessarily the way to go. But then I never thought that those tax cuts would go through. I think the extension of the tax cuts could go through, of the old ones from his last term. I don't think the new ones have a shot at all. And I think the reason is they're unfunded, and they make it less likely that the US is going to be able to repay its debt. And the bond market tends to get unhappy when countries get really indebted, and they are clearly not taking much interest in whether or not they're going to be able to pay their debt. I think there will be a bond market revolt this year. Pretty good chance, and I think I think interest rates will go up, which is what happens when you see a bond market revolt, because people demand higher prices for your debt because they're lowering their chances of getting paid back. That equally, when you owe an awful lot of money, as the American government does, and as most big governments do at the moment, it bumps up your interest rate costs. And actually, I was talking about the numbers, but I think a 1% interest. I think I wrote that a 1% increase at the current debt levels, a 1% increase in interest rates would lead to an increase in debt service payments every year of $370 billion. That's a lot of money. And realistically, if you start rolling over debt at 8%, then you're talking about without actually buying anything else extra, potentially adding a trillion, trillion and a half, 2 trillion onto your debt servicing. And this is again why people tend to be a little cautious. So Trump is a bit of a bull in a china shop, but there are sometimes you got to learn the hard way, and that is the hard way. I think we might be doing this year. Maybe not. We will see. Many things can happen in the future. In fact, one of my favorite comments is there's a lovely little quote, which is of Disputed Origin, saying, "Never make predictions, particularly about the future," which I like because, of course, all predictions are about the future. All right, so that's where we are on TNX, and that's where I think we're heading here. So I think all of this, we've been forming a bull flag on bond yields, and so I think the gains that we've seen over the last few weeks have been illusory and will quickly disappear. And in the expectation of inflation rising, I think they will be lost all the more rapidly. All right, CL. Now, CL, much to my surprise, because I really wasn't thinking that this was likely to happen, OPEC did open the taps. And that sent prices down. We made it down to 65 today. I've got a target at a retest of 63.57. And I think I've got a pretty good chance of making that. I've also got a Head and Shoulders, which was never invalidated, which has a target in the 65 area, and that basically made that target today. We don't have any significant positive divergence. I've got more to say about this on the daily chart, but I am liking the retest of 63.57 from here, and I think we might well do it. NG has been heading in the opposite direction, and I've still got nothing really to say that it isn't going to continue that way. I've got a double bottom target, which is significantly higher. We've got a 60-minute sell signal fixed here. Could be a double top here, but I haven't got anything compelling saying it's going to be. And I do have a big pattern that's broken up with a target, I think, in the 5.75 to 6.25 area, and it's obviously been making pretty good progress and may well make more. There's another thing, and I know I don't tend to mention the weather in my very technical analysis focused webinars, but my ex was pointing out that actually there's scheduled to be a big cold snap. Depending on a number of factors which could change, but a big cold snap affecting much of America and much of Europe at the end of March. That again, this sort of thing can, push NG up a buck. I'm wondering if that might be the impetus to reach that target. We will see. All right, let's have a look at those on the bigger picture charts. And CL. Okay, on the daily chart, no current divergence, but obviously we've been making some significant progress to the downside. I was talking about this being a bear flag. It's broken down and it's made target, and that target was 65.27. But I've still got a bigger target below, which is the retest of this low here at 63.57. Now, if you have a look at what I drew here, this is, I think, all a big falling wedge. This is just looking at the bigger patterns. On that, the obvious next target would be just above 64, and then at that stage, the retest of this low here at 63.57 would be doable. Now, we could go a bit lower than that, but I'm thinking there's probably going to be decent support there, unless, of course, we do something really stupid like have a huge trade war and the economy goes into recession, in which case this could go significantly lower. But I am thinking this has a decent shot at being a double bottom. And I've been wondering about this retest of 63.57 for quite a while, and I think this might be the time we're actually going to go and do it. So I will be watching that very carefully. If we go into recession, I have to say there are some nasty looking numbers being thrown around, particularly by the Atlanta Fed, then all bets are off. We will see. All right, let's have a look at natural gas. Now, natural gas, we've got a double bottom here. It looks very small on this chart. It feels large, but it's actually not really that large. I mean, we were up at in 22. We topped out at 10.04, and then we came down to 154 in one of the staggering moves that you only ever really see on natural gas or crypto. And I was writing a few months ago about a return to the low, which never happened, and then a possible double bottom that could break up towards the 575 to 625 area, which would bracket nicely a 50% retracement level at 5.8. That's in progress at the moment, and I'm not seeing anything compelling saying we aren't going to make that target. We did have a possible RSI 5 sell signal brewing on the monthly, but we're losing it. On the weekly chart, No divergence either. Lovely looking double bottom, really nice. And it's broken up. I'm not seeing anything compelling saying it isn't going to deliver. In terms of the daily chart, no negative divergence. We've got a weak RSI 14 sell signal, but it's only a weak one. Maybe it delivers something, maybe it doesn't. I'm leaning towards the upside here, mainly because we've got a nice pattern. It's broken up, and I'm not seeing any particular reason to think it's going to come down. Okay, we did have. I was talking for a couple of months about the nice seasonal lows that we had in like February to April area. I think at this stage it's pretty obvious we're not going to see that this year. Okay, let's have a look at GC. Now the dollar is tanking, and that's good for metals. GC has been, we had a double top breakdown here, and we're back at the weekly pivot here. I'm expecting that to break up, and I'm expecting to see a new all-time high on gold soon. On SI, I've got this as a bull flag that was forming on silver. Kind of messy, but actually this is a perfect channel. And this is broken up, and I'm expecting to see a retest of that high in the 34.6 area, and then I've got a target penciled in. Well, I'll talk about that on the daily chart, but I'm thinking it might go considerably higher. On HG, I was wondering if this was a bull flag, and it's a bull flag. And it's broken up, and I'm looking for a retest of this high here at 4.88. So those are all looking pretty good. We've got a possible weak 6-minute sell signal brewing on HG. That may or may not deliver anything. We're probably going to see a bounce on dollar in not too distant future, but really, if the dollar's heading down towards 100, as I think it probably is, that's going to be good news for metals. So this is metals looking pretty bullish in here, in my view. All right, let's have a look at GC. GC, we've still got an RSI 14 sell signal fixed. The RSI 5 sell signal, which I had on this chart, has made target. We've rallied, and we've got back up to the daily middle band. We've broken above it, and I think it's going to hold that break. We've still got an RSI 14 sell signal fixed, but I was mainly looking at the RSI 5 one. I think this might make target in due course, but there's no particular urgency to making that target now. Looking at silver, I'm liking a retest of 34.24 and then of 35.07. On the bigger picture chart, I'm thinking that we might do a retest. I'm actually thinking we might see a double top here. Yeah, sorry, I'd forgotten what the pattern setup here was. I think we might do a double top here and see a retracement back to this low, or we could break up. We shall see. All right, depends on the amount of momentum. It might well break up. Palladium and platinum haven't really been delivering anything particularly solid this year so far. We've come back and retested this low, which I was suggesting was a possibility on Sunday, and I'm thinking this might well be the second low of a double bottom, because I think a rising tide, or at least a falling dollar in terms of metals, will lift all boats. On platinum, didn't really get anywhere in particular here, and I don't have an obvious pattern here, but I'm thinking we're likely to be going up with the other metals. On HG, no current divergence. It's funny because we've actually got an RSI 14 sell signal fixed there. Sorry, I've got that marked incorrectly. I think it's because I rolled the chart last weekend. I'm expecting to see a retest this high here at 4.885. After that, I'm thinking we could, if the dollar goes down hard enough, and if tariffs don't become scary enough quickly enough, then I'm thinking we might see a retest this high here at 5.199. But copper is very subject to GDP. In the event that we see a significant slowdown in economic activity, it's probably going to come down again. But we've got an opportunity here, potentially, to retest that high. Looking at GDX, this is rejecting back up. We've still got double bottom targets, although we made the first one. We could head for the extended target here, which would basically be the long-awaited retest of this high here at 43.71. We'll see how that goes. GDXJ, again, I'm wondering about a retest of this big high here at 54.18. Looking, well, I'm actually going to see if I can get a weekly chart ready for next week, because we've got some higher targets beyond this. It's just we've been waiting so long for these retests, but I think we are going to see those shortly. All right, let's have a look at the commodities. KC, leaning towards a retest of the high. Having said that, we are at nosebleed levels here on KC, and this could well be the second high of a double top. SB. SB, we've got I had a nice looking double top here. We had a sell signal fix, and I remember saying just as that Sunday 3 weeks ago or 2 weeks ago or something that it was likely to make that target, and pretty much it made it the next day. We've been trickling along, bit of a rounded bottom going here, and we've got a 6-minute buy signal fixed. I think this might be bottoming out. On CC, we've got a potential double bottom here. We've got a 6-minute buy signal fixed, and we've got positive divergence on the daily chart, which I'll come to. Wheat, I was wondering about a retest of these lows, and we've seen it. No current positive divergence. Could go lower, but I am thinking we might find a low here. Corn, we've been seeing a bit of a rally. We've got an IHS which has formed. And actually, I'm going to just redraw that quickly. Hang on wait a second, because I think it's now become apparent what that target was, and it wasn't the way that I originally drew it. This is the inverted head and shoulders. I'll just actually calculate the target for you now. All right, that's just broken up, and it's got a target up here in about the 479 area, but basically it's heading back into this monthly pivot area of 485.75. This could be a significant reversal. Wheat was the one I was really keen to see retest the low, and we've seen it. Soy, well, we'll see. We'd already made the double top target. We've got a 60-minute buy signal, or we had one brewing. We've got one fixed now, and that's now made the possible near miss target. Nice rally off the lows, and we may well see more to the upside. Okay, let's have a look at those on the bigger picture charts. On coffee, I'm going to do a post on this in the next few days. I'm going to start knocking out a whole load of long-term posts on the bigger picture because I've been delaying. I've just been very distracted supporting a family member through a medical thing. But I'm going to get that sorted because I need to show you just how overbought this is on a long-term basis. And actually, maybe I can show you that now. I've actually been working on the charts for it. Let's have a look at coffee. All right, this is the 50-year chart. You see what I'm talking about? We had a series of highs, and we've gone one. I am wondering about a reversal here. We don't have any negative divergence on the monthly chart, but on the weekly chart. But actually, if we go back and retest the high as I'm expecting us to, then we will get negative divergence, both RSI 5 and RSI 14, and we could be looking at a significant high being made. I'm wondering whether that's exactly what we're going to see. And by historical standards, we are at nosebleed levels. We will see. Short term, we've broken back up over the daily middle band, and I'm leaning towards seeing a retest of 4.41. We could see reversal there. Sugar. We had a weak RSI 14 sell signal, and that's now reached the possible near miss target. The RSI 5 sell signal has reached the full target, and we've almost come back and retested the low. But I am thinking we might need to go back down and actually retest the low. I've got that low at 17.52, and if we reach it, that is the potential second low of a very large double bottom. That could be a real buy. And actually, I'm just having a look at that. So I'm gonna run posts on these, but I have been working on these already. Let's have a look at sugar. Sugar is pretty cheap at the moment, but we need to be aware there's possible head and shoulders here, and we may be completing the right shoulder at the moment. That could take us back to much more historic lows. So that's something to be wary about. I'll be watching the signal structure for direction. Looking at cocoa is also at near nosebleed levels historically, and we've been falling quite a bit, and this doesn't look like a bull flag anymore, but this could be bottoming action, and we've got a possible RSI 14 buy signal brewing and a possible RSI 5 buy signal brewing. I'm thinking we're likely to see a strong rally here. On wheat, I was leaning towards seeing a retest the low, and we've seen it. This could well be the second low of a double bottom, and I'm watching for signs of reversal, and we are seeing some signs of reversal. On corn, we had a double top here, and we've made the full target. I was thinking that might extend lower, but I'm thinking it might equally just reverse back up. We made the sell signal target. No current positive divergence, but if we rally a bit and retest, that could easily be fixed. On soy, we've made the head and shoulder target. Sorry, the double top target. Again, no positive divergence, easily fixed with a rally and a retest, or we could just go straight up from here. But I am thinking this is the level with wheat at the lows and these having made these targets, at which I was thinking these had a chance to reverse back up. We will see. Looking at cotton, we've got an RSI 14 buy signal fix. I had high hopes of this, and this is why I was thinking we might well be forming a double bottom here, but actually we fell through the trendline support here, and just to add injury to injury, I think the buy signal has now failed. So that's a write-off. Nice looking potential low on cotton, which is unfortunately gone the way of all things. We shall see. All right, in that case, I think that's a wrap. I'll have everything posted as soon as possible, and I'll catch you guys again on Sunday. In the interim, be careful. This is going to be a huge news bomb market. This is a fun market to trade. There'll be lots of volatility. And I think the overall direction for a few months is likely to be down. There's going to be big highs, big lows, lots of news coming out, and just be careful that you don't get caught at a place which by some unexpected news, and make sure you manage your stops carefully. All right, everyone, take care. See you Sunday.